Hi there, welcome to McBoss Capital. My name is Michael Chu. Today we're going to talk about three ways to invest in the stock market. Quick disclaimer, none of the stocks mentioned here are meant for investment purpose, so um, this is only strictly for informational purpose only. As always, we are focusing on sharpening our skills. Today we're going to talk about what to buy. Specifically, you can buy index uh, funds or sector or industry related funds. And obviously, you can dive deeper into the stocks. Depending on how much time you have, you may prefer certain areas over another. In terms of index investing, I believe Buffett just had his uh, annual general meeting. He mentioned again index investing is probably suitable for most people. Basically, the index are comprised of different stocks, usually quite diversified and quite broad in terms of sectors. So, buying an index fund kind of gives you the advantage of not have to worry about investing, choosing specific stocks to buy and stuff, and also making the decision to buy or sell. You just kind of buy the index fund and hold it for long term. Generally, that's the um, for example, what Buffett recommend, and um, and there's different types of indexes here. The ones that I follow are the four major indexes, Nasdaq Composite. Some people could invest in the Nasdaq based on QQQ, which is a Invesco Nasdaq 100 index. Um, and you can also invest in S&P 500 index. There's a index fund called SPY by State Street Global Advisors. Um, Another major index is Dow Jones Industrial Average. There's also another ETF or exchange traded fund called DIA by State Street Global Advisors. And finally, we have I also follow the small cap stocks, Russell 2000. You can also invest in IWM, which is iShares by BlackRock. There are many different index. There's mid cap. There's different indices out there. Uh, Obviously, all these are related to US. So depending on what you are interested in, for example, maybe you want to invest in emerging markets. There's also index for emerging markets. So I mainly invest in the US stock index in major indices. So this would be one, something that I'm more interested in. In terms of breaking down the stocks by sectors, um, one that I follow is from Sector Spider, also managed by State Street Global. Here, there's about 11 sectors here mentioned, um, and I have sorted it based on the way I usually look at the sectors. So here we are. It's the same one that on previous page. So for example, the main six areas I look at are technology, retail, industrials, healthcare, energy, and financials. So you can break it down further. There's a lot of industry group as well, even at the sector level. You can break it down further. So um, so there's lots of alternatives out there in terms of which one you want to mirror to invest. So for example, technology, maybe you want to break it down further into communication services. So you focus on stocks related to communication services, and that's XLC. Or you just want to buy the technology sector in general. So like you could buy XLK and so forth, right? So these are the main ones. And you can go to sectorspider.com and I'll show you in a second how to navigate there. And then State Street Global Advisor, ssga.com, also have more industries you can break down further. So if you want to focus on that, again, there's lots of companies out there that offer similar uh, ETFs like this. So it's not limited to just this. There's lots. Okay, we'll jump to the charts to just talk about the indices right now. So, for example, right now, this is as of April 30th, 2021. Right now, as you can see, this is the Nasdaq, which comprise mostly of technology growth stocks. Um, and you can see that right now, we had built a base since February, and now it's trying to come out of that base, and we are just sitting near the 10-day moving average, which is the green line. um, it is kind of pulling back to it. The question is whether this will continue, and right now it's definitely hitting resistance at near the previous high, which is around 14,000 level, right? 14,000 to 14,175. So it's just sitting there. Where it is crucial right now whether it will break out or not and go to a new high. um, it's hard to say. It looks like the market is trying to figure out whether it should go up more or maybe it might break down here. So something to, look into and kind of be patient about this right now. It's probably better to take a position after it breaks out because that clear this signal here and gives it uh, just a little bit more confidence. And right, we do have on April 29th, which is Thursday, it did get to a new high, but it didn't close above that previous high. So it may be just take some time to in order to continue its strength to rally. The next one we look at is actually this is the wrong one. We'll go to S&P 500 here. So S&P 500 is probably the strongest index right now because it's been hitting new high. As you can see on Thursday, it did hit a new high, so that's a really good sign. So definitely S&P 500 is showing a lot of strength compared to other indices. We're gonna go to sorry, Dow Jones here. Dow Jones has also been doing well. Obviously, you can see this nice uptrend. However, in recent week or two, it started to pull sideways. Now, this is not a necessary bad, just that it's going to take some time maybe to consolidate around here. Um, so on Friday, we did see some volume came in, probably due to end of April rebalancing. However, it is still holding on pretty tight around the previous high here. Again, it may just need some more time before it continues rally. The last major index we're gonna look into quickly here is Russell 2000. Russell 2000 has been more stagnant in the last few weeks compared to the other indexes. However, it's not all bad because it just, obviously has a big run right here from November to, I guess, middle of March. It did start to break down a little bit here ending March, but in April it was starting to move back up and kind of sit around its key moving averages, which is 10-day, 21-day, and 50-day all synchronized right here. And now it's starting to move up a little bit, and it is falling the last 2 days. So there's still some obviously you see the volume is higher, and you can see that there's some distribution or selling here. um, you know, but again, this may shake out some weak investors and it may continue on this rally. But watch, it is quite not, it's not near the previous high. So, um, obviously taking a position here, may not be that bad because you are near the moving averages. Because if it does break down, you can cut your losses there. Um, or like I said, it may rebound from here and continue on. It's really hard to say as we enter May what's going to happen to the market. It looks like all the major indices are trying to consolidate here in the last week or two. So it's important to see what's going to happen. So we're gonna quickly just go through the 10 or 11 sectors from Sector Spider just to see what where the strength is. So this is technology group. It is kind of consolidating here. It did, break out to new high. So it's a pretty good sign because it's not like, breaking down after it went to a new high. So it's kind of consolidating here. It might just take a little bit more time before it continues its rally. But, that with all this being said right now, I think heading into May is definitely a patient game to see whether the market wants to rally higher. So just watch and see. If you break down further into communication service, it's definitely doing a lot better. As you can see in this chart, it's hitting new high on Thursday, right here. It did pull back on Friday, but it just shows some strength, right? The gap up here. On the retail side, we are seeing a recovery from after this big two peak, the peaks here. It is slowly coming back up. It's really slow. However, it is again, you see most of the groups are having similar, just hovering just below the previous high here, and it's hard to say whether this will break into new high. Consumer staples. Again, this one broke to new high here and just consolidate here or in the within the few percent range here. We have discretionary. So, obviously a lot of people talking about the economy recovering and people, spending more money in discretionary. So this is might be something to watch here. It's really tight. You can see that it almost ready to break out. So something to watch out for. Um, Again, it feels like the market is ready to make a big move soon. So maybe this first week of May, I'm not sure, but something to watch out for. Industrials, definitely this one for a nice uptrend, gradual, but it is quite a uptrend, sitting above its 10-day line, so you can see the line trending upward nicely. If you want to dive further down, you can go into materials, and you can see materials are the strength quite strong. So definitely one of the economy recovering sector. Utilities, obviously also have a good run, but recently you can see it pull back to its 10 below 10 and then to its 21-day moving average. Now it's starting to move back up. So usually utilities are more defensive. So this may be interesting to see whether utilities are going to take more strength because that might mean the market is just continue to consolidate more. The health sector, it did break out and now it's pulling back as well. So, health and technology generally represent some growth areas. In general, the energy sector has been consolidating, probably the weakest one of the weakest one in the all the sectors. As you can see, it's still in the base. It's near the halfway point of the space, sitting around 50-day moving average. It did have a strong uh, 5 or 6 days in the last week or so, and then on Friday it did pull back. Now, there's a lot of talk about energy prices going up in the next second half of the year because of economy recovery from the pandemic. So this is definitely something to watch for, and it may be, might be worthwhile to take a look at this, following this closely. As economy recovers, you may have a better position right here, even a small one. Finally, we're going to talk about the financial sector. It is definitely really strong. With lots of possible inflation coming up, the banks will will benefit the most from that. So you can see, the run, the curve of the moving average is stronger. So other than that, I just want to finish off. If you go to sector spiders, you can also look at each individual sector and choose which sector you want. You can see the stocks that are in that sector, and you can study them as well. So that's just a way to look into what stocks comprise of those sectors. Obviously, there's many stocks, but at least it gives you some idea. Thank you very much for watching this video. Give us thumbs up if you like this video. Subscribe to our YouTube channel if you haven't. Contact me at support@mcbosscapital.com if you have questions, thoughts, or help analyzing specific stock. Thanks. Have a good day. Bye bye.